So the first thing we want to know is the ending inventory of materials. That is, after we've produced all the product we can for the month, how much material do we have left over? To do this, we start with the beginning inventory of the materials. We add in how much material we purchased during the month, and then we subtract out direct materials that were used in production. This gives us the value of the ending inventory of materials. In looking at the ending inventory of materials formula, you'll notice that we need to know the direct materials that were used in production. To determine the amount of the direct materials used in production, we need to know the value of the materials in the inventory at the beginning of the period. We need to know how much we bought during the period that we're looking at, and we also need to know the value of the material inventory at the end of the period. So with this in mind, let's figure out the ending inventory of materials for the case. So we see that Blue Denim Company makes blue jeans. On May 1, Blue Denim had $68,000 of materials in inventory. During the month of May, Blue Denim purchased $210,000 of materials. On May 31, materials inventory equaled $22,000. Even though the ending inventory of materials was given to us, at the top of the slide I laid out how we would calculate it if we didn't have that information. So they tell us there's $68,000 worth of blue jean material on May 1st. During the month we bought $210,000 worth of blue jean material, and $256,000 of that was used during the month to produce blue jeans. That means at the end of the month we had $22,000 worth of blue jean material left in inventory. From there, we could figure out the direct materials that were used in production of the blue jeans. The materials inventory May 1st, we had $68,000 that was given to us. We bought $210,000 worth of blue jean material during the month, and the materials inventory at May 31st was $22,000. If we subtract that, we get $256,000 direct materials that were used in production during the month. Now that we know the cost of the direct materials that were used in production during the month, we could figure out the total cost of goods that were manufactured during the month. Aside from material costs, we add in the direct labor cost and the manufacturing overhead. That gives us the total manufacturing costs for the month. We add to that the work in progress at the beginning of the month. This represents the value of the unfinished items that were still in production when the month began. We subtract out the number of units still in production when the month ended. That gives us the total of the cost of goods manufactured. We're going to take a closer look at this in the next slide. Now that we know the amount of direct materials used in production during the month, we could calculate the cost of goods manufactured. So in this case, we'd be figuring out how much it cost us to produce all of the blue jeans that we produced during the month. So we start out with the direct materials that were used in production of $256,000, which we just figured out, and that's how much all of the material cost to produce the blue jeans during the month. Direct labor of $135,000, which they gave us. A manufacturing overhead of $150,000. Add that together and you get a total manufacturing cost for May of $541,000. That tells us what the total cost of manufacturing was during May, but it doesn't tell us the cost of goods manufactured. To determine that, we need to look at the work in process. Work in process is the cost of the partially completed goods that are still on the factory floor at the end of the time period. These are units that have been started but not finished. Production generally doesn't start or stop at a specified period of time. Therefore, for accounting purposes, we need to know how many units were in production at the beginning of the reporting period and how many units were in production at the end of the reporting period. We do this in order to figure out how much was manufactured during that period. So we have our total manufacturing cost for May of $541,000. On May 1st, when the period began, we know that $50,000 was still under production. We add that to $541,000. At the end of May, there was only $16,000 worth of units in production. We subtract that out because those are goods that are not finished and therefore not yet attributable to the cost of goods that were manufactured. $541,000 plus $50,000 minus $16,000 equals $575,000, and that's our cost of goods manufactured for the month of May. Knowing the cost of goods manufactured, or the total product cost of goods completed during the current period and transferred to the finished goods inventory, allows us to calculate the cost of goods sold, which represents the cost of goods that were sold during the period and therefore transferred from the finished goods inventory on the balance sheet to the cost of goods sold on the income statement. Notice the distinction between the two. The cost of goods manufactured represents inventory, which is an asset for the company represented on the balance sheet. When that inventory is sold, the cost of the goods that were sold become an expense, which is found on the income statement. If we take the cost of goods manufactured and then we add to it how much inventory we had at the beginning of the month, subtract out how much inventory we had at the end of the month, we could figure out what the cost of the goods that were sold during the month were. The assumption here is that if an item is leaving inventory, it's because it was sold. Aside from the value of the inventory sold during the month, it's also helpful to know the number of units that were sold. To calculate this, we take the number of units that were in inventory at the beginning of the month. We add in the units that were finished during the month, so that is, they were added into inventory. And then we subtract out the ending balance of our inventory at the end of the month. In that calculation, we could figure out the units sold during the month. So let's calculate the cost of goods sold for Blue Denim Company. So previously we determined that the cost of goods manufactured during the month of May was $575,000. We're given that the finished goods inventory at the beginning of the month was $50,000 and at the end of the month was $130,000. Plugging that into our formula with $575,000 in cost of goods manufactured, we add in the cost of the beginning inventory, and then we subtract out what was left over at the end of the month, giving us cost of goods sold for the month of May for Blue Denim Company of $495,000. Looking at the number of units sold during the month, the case tells us that Blue Denim had 10,000 units in inventory on May 1st, and during the month they completed production of 115,000 pairs of jeans. At the end of the month, they only had 26,000 pairs of jeans in inventory. So if we take the finished goods inventory on May 1st of 10,000 units, we add in the 115,000 they produced during the month, we subtract out the 26,000 pairs of jeans they had left in inventory. At the end of the month, we figure out that they sold 99,000 pairs of jeans in the month of May. Now that we're able to figure out the cost of goods sold by a company, we're able to take a closer look at how income statements come together. That'll be in the next lesson.